Two friends, Samir and Shubham, decided to invest in Natco Pharma, a pharmaceutical company. Both saw potential in the company's future. They invested the same amount of money initially. However, their investment journeys took vastly different paths. Samir followed a traditional approach, holding on to his initial investment. Shubham, on the other hand, used a strategy called pyramiding. This strategy would be the key to his success. After a few years, Samir earned a respectable return on his investment. Shubham, however, achieved extraordinary gains, growing his initial investment exponentially. This story illustrates the power of having the right investment strategy. It shows how understanding market trends and reactions can significantly magnify returns. This essay will delve into the details of Shubham's strategy, explaining how pyramiding works and why timing is crucial in its implementation. Natco Pharma, the company Samir and Shubham chose to invest in, won a significant legal battle. The company, known for its generic drug manufacturing, successfully challenged the patent of a popular cancer drug. This victory allowed Natco to launch its own, more affordable version of the medicine. This development had huge implications for Natco. Analysts predicted a surge in the company's revenue and profits. The news spread rapidly, attracting the attention of investors like Samir and Shubham, who were quick to recognize the potential opportunity. Shubham's investment strategy, pyramiding, involves gradually increasing investment in a stock as it rises in price. It's like building a pyramid, starting with a broad base and adding smaller layers as the structure goes higher. This method differs from the traditional value-based approach that Samir followed. Value investors typically buy stocks they believe are undervalued by the market. They then hold on to these stocks for the long term, waiting for the market to recognize their true value. Shubham's strategy, on the other hand, capitalizes on momentum and market sentiment. Timing is crucial in Shubham's pyramiding strategy. He doesn't just buy more of a stock because it's going up. He carefully analyzes market trends and company performance. He looks for confirmation that the initial upward trend is strong and likely to continue. This approach requires patience and discipline. It's not about chasing every upward tick in the market. It's about identifying the right moments to increase investment when the potential for further growth is high. Section 5. Market Reactions, Your Guide to Action. Shubham pays close attention to how the market reacts to news and events. In the case of Natco, the positive market reaction to the legal victory was a strong signal for him. The surge in stock price wasn't just a temporary blip, it reflected a fundamental shift in the market's perception of the company's value. This understanding of market sentiment is key to successful pyramiding. It allows investors to ride the wave of positive momentum, gradually increasing their investment as the market's confidence in the stock grows. Section 6. Shubham's first investment, a calculated risk. Shubham decided to invest 5 lakhs in Natco Pharma after their legal win. He believed the market had underestimated the positive impact of this victory. He saw an opportunity for significant growth and decided to make his first move. He bought 1,000 shares of Natco at 500 rupees per share. This initial investment was a calculated risk, based on his analysis of the company and its future prospects. Shubham knew that the market can be unpredictable, but his research and understanding of the pharmaceutical industry gave him the confidence to proceed. This first step was the foundation of his pyramiding strategy. Section 7. Riding the Wave, Shubham's second purchase. As expected, Natco's stock price began to rise. The market reacted positively to the news of their affordable cancer drug. When the stock price reached 750 rupees, a 50% increase, Shubham made his second move. He invested an additional 3 lakhs, buying 400 more shares. This purchase was smaller than his initial investment. This is a key principle of pyramiding. As the price goes up, the investment amount decreases. This approach helps to manage risk and maximize potential returns. Section 8. The Peak of Success. Shubham's final move. Natco's stock price continued its upward trajectory, driven by strong sales of the new drug. When the price reached 1,000 rupees, Shubham decided to make his final move in this pyramid. He invested a final 2 lakhs, buying 200 more shares. Shubham's total investment in Natco Pharma was now 10 lakhs. However, due to his well-timed purchases, His 1,600 shares were now worth a staggering 1.6 crores. He had successfully multiplied his initial investment 16-fold. Section 9. The Power of Pyramiding, a Recap. Shubham's journey with Natco Pharma perfectly showcases the power of pyramiding. By starting with a reasonable investment and gradually increasing his stake as the stock price rose, he was able to capitalize on the upward momentum. His strategy allowed him to turn a 10 lakh investment into a 1.6 crore holding. This approach requires careful planning, thorough research, and a deep understanding of market dynamics. When executed correctly, pyramiding can lead to outstanding returns, as Shubham clearly demonstrated. Section 10. Contrasting approaches: pyramiding versus value investing. It is important to contrast Shubham's strategy with Sameer's traditional value investing approach. While Sameer also benefited from Natco's success, his returns were significantly lower than Shubham's. This difference highlights the potential of pyramiding to generate outsized gains in a bull market. However, it's crucial to remember that pyramiding is not without risks. It requires a strong understanding of market trends and the ability to accurately predict future price movements. Value investing, on the other hand, focuses on the intrinsic worth of a company, making it a potentially less volatile approach. Section 11. Conclusion: the 20 crore portfolio, a testament to strategy. Shubham's successful investment in Natco Pharma was not a one-time stroke of luck. He replicated this strategy with other well-researched stocks over time. By consistently applying the principles of pyramiding, he built an impressive 20 crore portfolio. His story underscores the fact that successful investing is not just about picking the right stocks, but also about having the right strategy. Understanding market trends, reacting to news effectively, and implementing a proven method like pyramiding can significantly amplify returns. Shubham's journey serves as an inspiration for anyone looking to navigate the exciting world of stock market investing.